Welcome to a capital hungry breakdown on GBPCAD, British pound against the Canadian dollar. It's been a while since we have done a breakdown on this pair, but we will of course be going from the higher time frames, looking at the yearly chart, quarterly, monthly, and going to the intraday time frames, discussing some of the fundamentals impacting this pair and potential trade ideas we can take advantage of. So, as you may know, there is still a lot of seller's pressure on GBP due to the negative pressure coming from Brexit. COVID is still active in the markets, even though it is having, even though its impact is starting to get waved off, and it's already done. It's already done what it's meant to do to the financial markets, as we talked about that greatest transfer of wealth. But it's still relevant. It is still something that is active. We have to monitor that can bring back mass fear sentiment. Oil, which is correlated to, of course, Canadian dollar strength and weakness, is something good to look at. Is still holding bulls ever since its crash at -40. It is still holding above $30 a barrel and fairly bullish when you're looking at like the daily and weekly time frame, which we will reflect. And last week, the Bank of Canada did have a more hawkish stance regarding Canada's economic recovery. We still have to keep in mind all the global trade deals, but in my opinion, GBP has more seller's pressure on it versus the Canadian dollar, which has been showing more signs of potential rebounding, especially as Canada isn't involved in as much global political conflict as well. Like Brexit is still something that is very active and ongoing, impacting GBP and euro, of course. And we still have the UK, which is going to have trade talks with the US, but they did have positive trade talks with Japan, where that impact has been already waved off as Brexit seems to be the main thing in focus. So when we're looking at the yearly chart here, we can see price is showing us more sellers impulsive candles and sellers in control. Even after this original melt move where we had sellers in control for an extended period of years, we had this order block created. And once we peaked that low and we had a corrective action of that seller's impulsive move, you can see it was only about a 50% correction of the overall impulsive move impact, and it rejected at that order block area, where directly after we had sellers come back right back to visit those lows again. So sellers are showing me a lot more control. We can also see that this buyer side action has been more corrective ever since there's been so much sellers pressure on GBP over the last few years, as Brexit has been going on since like 2018. And we are failing to remain above a key level 1.18, as well as creating a very solid resistance at some areas of price sensitivity you can see to the left. So I do see, just looking at the yearly from a macro perspective, understanding if Brexit has no progression or if there's any signs of another lockdown from coronavirus, if that escalates in the UK or around the world, we can see the potential to fill some of this seller's range and revisit some of these lower demand areas on GBP just by looking at the yearly there and looking at some of the macro sentiment. I'm just going to start mapping out some key levels using the candle body conjunction points on the yearly, and then we'll see if our ideas are still validated when we go to the quarterly chart and work our way down the time frames, discussing what's going on. And then also keep in mind some of the events we have going on this week as well. Okay, so we have some nice key levels just from the yearly perspective mapped out so far. I'm just rounding them off quickly. Now, looking at the quarterly chart, we can identify that price was creating a potential support area, very similar to what we saw from these low points around 1.587, except the overall macro outlook is that sellers are still in control, and this is more corrective action here, meaning this liquidity that is being generated is higher likely to be potential sell side liquidity, especially as this quarterly candle has already created a significant top wick and rejected the same area of price sensitivity, as you can see here, where we have failed to break above multiple times pretty much since 2018 period. And overall, we still have these sellers impulsive candles showing us that sellers are in control. And this now becomes a potential demand and target area from a swing perspective, where especially if we break below 1.657, this key level marked here, where it has held as a support and price has played in this range for several years now. If we break below there, we have an easy meltdown to revisit these lows around 1.557, 1.587. But even just playing from the current price point to revisit these lows is still 400 pips that we can take advantage of. But just looking at the quarterly chart, you can see it validates our idea of macro bears and higher time frame bears in control. When we're just zooming in now, like we already talked about, we can see buyers have failed to break these high points multiple, like in this range at least, these high points for multiple years now. Just for this quarterly period and this 3-month candle, we've already wicked there again and failed to break. So if this candle does have the potential to close like a very weak bullish candle and the following candle just start to melt down. And now we just want to map out some more key levels using some of these 3-month candle body conjunction points, and then we'll go down to the monthly time frame. But yeah, it is showing us that Brexit pressure is still evident. Even when we had that market optimism that was giving GBP a bit of a boost, it still wasn't enough to break some of these historical levels you can see from that 2017, 2018 period. Yeah, this looks like a lot more seller's pressure with the amount of rejections we've had to break this key level at around 1.7615, 1.765 here. Very strong potential monthly candle close as it has the potential to close bearish. Once we start to break below 1.704, we will come revisit these low points. I would only see long-term buys really on GBP CAD above this level at 1.615, where we've failed, where buyers have failed to break for so many years now in a consecutive fashion. And we can see even over the last couple of months, we failed to break there. Even like I was discussing on the quarterly time frame, even with that very strong bullish engulfing candle close, where it looked like market optimism was very strong and GBP had so much buyer's pressure on it, it still was not enough to break this historical level. And this candle does have the potential to close fairly bearish over the next 2 weeks. As well as the quarterly candle, the 3-month candles are closing in the same period as well in the next 14 days. So we do have potentials for very strong bearish closes there, as well as in the current market climate, the main things that are being focused on for GBP pairs is the Brexit tensions and the Brexit pressure. So we have to watch that accordingly. And we also have to keep in mind some of the UK data, which has been fairly neutral, but the data is being compared to economic crash data, and it's all being processed as COVID crash data. Even before coronavirus, GBP was already, like, not GBP, the UK was already losing jobs and having very poor economic data. And like even basics, like only Brexit optimism was really bringing up the British pound. For example, on GJ, the last time GJ has seen real highs was around the 148 point, where there was optimism when Boris Johnson got elected, and they thought there was going to be a lot of change regarding Brexit and positivity. But we could see that it's still a big mess. So on a macro perspective, that really restricts GBP pairs from breaking key level highs or that bearish market structure that you can see on a lot of GBP pairs across the board, unless it's against a really, really weak currency or an off pair currency, right? But against the Canadian dollar, which is holding strength from that boost of oil markets and how we failed to break those highs multiple times, I am looking for pullbacks to some of these key level areas and continued downside. Now, I just want to clean up some of these ranges, as some of these ranges are quite large. So I'm just going to do that by looking at some of the monthly candle body conjunction points and giving us some more price point guides to work with when we look at intraday levels. Okay, so now that we understand some of the macro structure, that sellers are in control, some of the key price point areas that buyers have failed to break for multiple years, some of the macro impact on GBP and some of the macro impact on CAD, like the boost from oil and how GBP has its seller pressure on it, let's just technically observe how price action has played the last couple of months through these key levels. so we can validate using them as guides, because most of these key levels are mapped, of course, using the yearly, quarterly, and monthly historical points. So we can just observe that. On the smaller end, some of these ranges are 50 pips. On the larger end, they can extend for like 150 pips. But let's just watch how price action played out. So as you can see, these price points are having great reactions on the intraday time frames, where of course, when you're looking for entries and you go to the lower time frames using the 1 minute concepts of looking at price reaction at these key levels, it's even better. But let's start looking at it on the intraday time frames. As we know, these key levels are good guides. Okay, so first thing we want to note is very similar across a lot of GBP pairs. When the Brexit pressure came back into play, we had a solid break of some intraday bullish structure that we were developing. Okay. This reaction and rejection came from that high point that has failed to break over multiple years now. And you can see that even when we had this strong pullback and a lot of buyers re-enter the market, and even with this pullback and sell-off, we did not break bullish structure at that time. That was still not enough buyer order flow to revisit those highs or break those highs. Then, as Brexit volatility entered the market, we had that break of structure and then sellers' impulsive candles and sellers take over in the market, which is validating what we're seeing on the yearly, quarterly, and monthly timeframes, anyways. So now we can identify that before we had this sell off, this was an area where some liquidity was being generated from these points, where price was in a bit of an indecision, where sellers were failing to break previous lows and buyers were failing to test and break previous highs. So you had this liquidity being generated that ended up being sell side liquidity and breaking bullish market structure due to CAD still holding strength from oil bulls and that positive Bank of Canada hawkish sentiment last week, as well as that negative Brexit pressure on GBP, creating that one-sided volatility. So from this point, we could see a potential sell-off from the key level 1.735 to key level 1.682, where we're getting great reactions of almost 527 pips. We're seeing more impulsive sellers candles, and the upside is starting to look corrective as well. So now from this peak to low point, about a 50% correction of that downside move would be if GCAD comes to retest around this minor order block area. You can see where price had its meltdown and our key level around 1.7085. So that would be about a 40 to 60% correction of the impulsive downside move. Sellers can potentially re-enter the market here, and more seller order flow enters the market, and then we continue down to revisit these lows and potentially break lower. Okay, so let's, with using that information, understanding that UK data is fairly neutral, there's still a lot of negative Brexit pressure, the Canadian dollar is holding short-term strength, everything else stated technically and fundamentally. Now let's map out some trade ideas on an intraday perspective for GBP CAD. And let me actually start to label this out of what I was describing, because I'm going to send it over to you guys anyways. So I'll pause the recording for a second, and then you guys will see it back up magically labeled, and everything looking beautiful, you know? Okay, so now the recording should be started again, and you guys should see a labeled chart in front of you. This was just quickly briefing what it was explained in the entire breakdown. When we went down from the higher time frames, mapped the key levels, looked at the reactions of the key levels to use as guides and validated that, identified some of the market structure on the intraday. And what I can see is that first, at this yearly, quarterly, and monthly resistance, buyers failed to break this level for years. We were still holding intraday bullish market structure. Liquidity was being generated in this indecision area, or a technical range, you can call it, where you're having fundamental indecision at that time and price at a very key higher time frame decision point. And technically, we observe that as buyers failing to break highs, sellers failing to break lows, etc. Buyers after buyers entered the market after a pullback to retest the bullish structure to generate more buyer order flow, but again, failed to revisit those previous highs or break above those previous highs. And we could see sellers came back and snapped back into range. Then we had a break of the bullish structure, a break below our predetermined key level based on the negative impact on GBP and sellers' pressure on GBP from Brexit tensions and having a hawkish sentiment from Bank of Canada, giving more one-sided volatility. We have that break of bullish structure and sellers take over due to that downside pressure. Notice more sellers impulsive candles, and then an intraday low form that we haven't seen, of course, in at least the last month period or so, right? So now what we are noticing is that from the potential liquidity grab and liquidity generation area, we had about a 500 pip meltdown, and we are looking for about a 200 pip correction, around like 520 pips, 220 pips back up. That 50% correction would also line up with our predetermined key level and around retesting this minor order block area where you can see there was some liquidity generated before impulsive sellers took over. So right now, this upside is looking like more corrective upside, and potential sell points I see are around 7.085 or 7.04, or break below previous lows. I would only really look for upside on GBP CAD if price comes above 1.716. Why and what would we need for that? For price to come, for me to see more confidence in extending buys on GBP CAD, we would need more Brexit optimism, a hawkish sentiment from the Bank of England when we look at their meeting minutes, continued strong UK data, as well as oil to turn more bearish to wave off some Canadian dollar strength, and price to break above higher than a 50% correction of the downside move and come above this order block area and correct the seller's impulsive candles on the downside, right? So even if we reject at this point again, come to revisit these lows, fail to break those lows and show more sellers exhaustion on the intraday, then have that move, that's perfectly fine. But we would have to watch price action accordingly. That is what I see on GBP CAD as per the full breakdown, and what I see as per intraday trade ideas and potential swing trade ideas.